like perhaps the timing work, I don't want to rush through that. And I also don't want to overwhelm you with so much information all at once that it's kind of like eyes glaze over kind of stuff. So we will take our time with it, and hopefully we'll be able to keep the questions, kind of on point. And yeah, here we go. So how are we doing with digesting everything we talked about yesterday? Good? Okay. We're going to, sorry?
Nothing. I was talking about breakfast.
Oh, digesting breakfast. Yeah, that's important too. We're going to talk about patterns for a little bit. There are a couple of patterns in particular that we use a lot on intraday charts and longer-term charts. And these are basically specialized ways of applying some of the fib stuff that we talked about yesterday. Now, I know a lot of you are familiar with the Gartley pattern or the ABCD correction. I do it a little bit differently, so even if you're familiar with the pattern, I'd like you to pay attention a little bit to what I'm talking about. The reason I do it, I can't say differently, but I do it with a little bit more specific parameters than the original Gartley pattern was given. And a lot of people have kind of like, it looks like a Gartley, so I'll use it. What I did was, over a period of several years, I kept track of anything that looked like a Gartley. And I quantified, I sat down, I did a spreadsheet, and I kept stats on which scenarios are most likely to play out properly. So my Gartley parameters, see the other program's getting in the way here a little bit. My parameters are a little bit more specific than what you might read in a book about Gartleys. All right, we're going to get into that first. A Gartley is a corrective move within a trend that looks as though, at first it looks like the trend is changing. That's one reason it's very important, because let's say you're in an uptrend and you start to see a pattern of lower highs and lower lows. You might be thinking about getting short at that point. And the thing is, if those waves, if that pattern matches very specific fib relationships, okay, you're going to get trapped in that short, and it's going to spring back in your face and end up stopping you out. And instead, if you can recognize those parameters, you have a really great long setting up. So I have some examples, and I'll just show you what it looks like first, and we'll go into the ratios used. This is a YM chart from like last week or something. Yeah. And basically the Gartley is a corrective zigzag. Okay? Not just any zigzag. I'm going to talk to you about the ratios that I use in this. You can see what happened is, here a lot of people would have been thinking about shorts, and actually that's what happened. Oh, it took out the prior swing low. This is going to go down. Well, at this point in time, thank you once again, we had a lot of support there based upon the Gartley pattern. And you see what happened is it made it all the way up to the target, the 1272 target. We had another little swing. Remember what I said yesterday about how sometimes the target, even if it's not a permanent stopping point, it'll pause, give you a pause and a pullback. What happened here was this pulled back to support. These lines were right under price there at that point. And we got another long. Actually, we were triggered on that too, and it made it up to the next target. But what I want to do is show you how to construct this Gartley. And there are a couple other examples here too, just to see, just to show you how this takes place in a lot of different markets. Here is the S&P cash. This was, a nice big zigzag corrective move. And the thing about a Gartley is it can be a pause. It's kind of like a consolidation, and it can get you a lot more than the targets. Okay. And Will, this was, everyone moved. Yeah. There you are. This was in alignment with that trigger you were talking about. For that newsletter. Yeah, and if we go to the weekly, which we will later, you'll see that it lines up with a trigger there. It actually lines up with a 5034 on the weekly. So you can see this goes, it's a very important pattern to be aware of. Bless you. A couple of other examples. Okay, here is, I just want to show you something here. Little zigzag pattern. This is called an ABCD correction. Now, why is it ABCD? Because you have point A, point B, point C, point D. Okay? You're trying to project for point D, where point D is to find your support in a support ABCD correction. This is gold, by the way. And, obviously that worked out pretty well, too. There's another one up here that worked out pretty well. There's a little difference between a standard ABCD correction and a Gartley. The Gartley is a stronger pattern than a standard ABCD, but let's go over the parameters that are being used for this. Anyway, basically what you're going to do is, remember what I said yesterday, you have a high, and let's say it's coming down to support here, and you're looking for longs, okay? At that point, you would take your retracement tool and go high to low, right? Because you want to see what's in the way on the way back up, and you want to see the targets that it would project at that point. You're always doing that anyway. That's why it's not, you don't have to go to the chart and try to hunt for a corrective move or hunt for a Gartley. You're always going to have the next levels in line up this way. And I'll show you on some current charts a couple that are setting up at the moment as possible Gartleys. But you remember when I said that high to low? Because you're looking for the U-turn, the target's up here. What happens is, if this fails, if price here fails between 618 and 786, starts to go down, you are looking for the possibility that it's going to break through to downside. Okay, so you might want to write on the chart that the point we're looking for here for an ABCD correction or Gartley is between 618 and 786. So in other words, you're going to take your retracement tool. You'll do that at any high anyway. Like down here, this one wasn't a Gartley or a corrective move, but if you had support here and you were looking long, you would have gone high to low with the retracement tool to get the upside targets, which by the way landed up here. This is a pullback from a target. Okay, so you'll have that on the chart anyway. You're looking for failure at 618 to 786. All right, everyone has that? I know folks that are familiar with this pattern definitely are aware of that. The thing is, if you read a book on this correction, they will tell you that it doesn't have to be 618 to 786. They'll tell you it could be 50%. I found that those are more likely not to work out. In other words, if you hold up here at 382 to 50%, it's more likely that it's going to be a downside reversal. Remember what I told you about the 382 being a strong level. Okay, so you want to see a bounce to start setting this up as a possible ABCD correction, in my way of thinking anyway, 618 to 786. Starts to fail there, and what you want to do then, you're looking for downside targets. Okay, so what you're going to do is you're going to take your retracement tool and you're going to take this low to the high where it failed to get the targets downside, 1272 to 1618. Where are those landing? All right, everyone following that? Okay.
Retracement from where to go low.
The low here, okay, to this high, where price is starting to fail, and you want to get where the targets, because let's say it was actually setting up as a short for you, you'd want to see how close those targets are to downside anyway. Yeah. Okay, so you go low to high with the retracement tool, and we'll do this live, but I wanted to show you on some examples here so you could also write in those ratios. You want to go low to high, and you're particularly concerned with where the 1272 to 1618 downside targets land. Okay, then to reinforce that, you also take the expansion tool. Remember how in the expansion tool, usually we're looking for high to low from new high, high to low from new high to get current support. We're working against the trend, high to low, new high, high to low, new high. In the case of a possible Gartley where you see the failure, or ABCD correction, you see the failure 618 to 786. In this case, you will project with the direction of that movement. So in other words, you're going to take the expansion tool and click high to low from this intermediate high to get the red line, the expansion. What you want to see is 1272, 1618 extensions, and you want to see the red expansion either land right on top of one of those extensions, like here, it's on top of the 1618, you can't even read them, or at least in between them. All right? In other words, the expansion should come somewhere between 1272 and 1618. Not in the traditional Gartleys where the failure is a lower ratio, 382 to 50%, the expansion is going to land somewhere down here instead. It's going to be way beyond the targets, and those are the ones that are a lot weaker. Yes?
Does A being D necessarily that you will see D?
No. No, as a matter of fact, if the expansion, good question, if the expansion lands in between, that's basically all you want to see is the expansion landing in between the two extensions. The expansion might be broken, but the 1618 will catch anyway. All right, so in other words, it might surpass that expansion. The thing is, it's just a stronger support area if the expansion is either overlapping one of those levels or between them. So it can, yes?
So the length between 1 and 1.618 is still good?
Yeah, if it land, not below it though.
Yeah.
Okay?
Just to be clear, the expansion is from A to B from C.
Exactly, exactly. A to B from C. Remember that magic word from, means it's 3 points too.
Brian,
Yes.
the ratio for the C is between 618 and 786?
Yes.
And for the D point is?
It needs to land between 1272 and 1618.
272 and?
1618. Yeah, and the reason I didn't mark all this up, actually, by the way, if you go to my website, if you want some more time on this, my website, if you don't have it, I can give you the link, www.mjbraun, it's my first initial M, middle initial J, Braun, last name, .net. And there's some videos on there. There's a half-hour video that I did on the Gartley. It's called the Gartley webinar. And on that, it's not just a video, but I also have a page with some cheat sheets that you can print out that give all those ratios. The reason I didn't put them in the workbook is because I want you to write them down, because I found that your memory process works better if you have to write it. Okay? And we're looking for these all day, basically, and they work out really well all day and also on the longer term charts. Now, this one I was calling it ABCD simply because, we're just working with this zigzag. Little corrective move, kind of an outer space. I don't have other support here. This was actually a Gartley, though.
A quick question.
Yes.
You said that the Gartley there, that ABC, you would have gone with that AB.
Right.
To do and then take the high of the next high. But that C is not really a next high. The next high would be much higher up.
Right, but that's you're going from the lower high in this case. If you see price begin to fail as 618 to 786, in other words here, if this fails at 618 to 786, you want to check for the possibility that you have an ABCD correction or a Gartley. So in that case only, not if it fails at 50% or at 382 or whatever, but only if you see this fail 618 to 786 of this swing. In that case, 618 to 786, yes, you project the expansion in the direction of that move, A to B from C. Only if it fails between 618 to 786. Okay? The difference between an ABCD correction and a Gartley, and this one actually is a Gartley, is that if you can take an outstanding low before this pattern and use your retracement tool, which should be done on your chart already, low to current high, at that point that was the current high. If your Gartley ratios land together with one of the more important fib levels from that retracement, it's a Gartley. In other words, it needs that leg first. What this is saying is it's a zigzag correction into stronger support. All right, so mixed in here, we have the 618 level in that zigzag. Okay? The reason it's important to note the difference is because, first of all, the Gartley is a lot stronger than just an ABCD that's out in outer space. If, let's say we had the little zigzag up here, okay, and it did this, if we were to run a retracement low to high, probably all that's up here is like the 236. That would be a relatively weak level. So you'd still have the ABCD correction, but the probability of it holding is much less. Yes, Will?
Just out of curiosity, if you're not looking at the CCI, what's your favorite place to enter long on that Gartley?
There are variations of, well, if I'm not looking at the CCI, the thing is I am, yeah. So, well, there are a lot of ways. I kind of like Larry Pesavento has a technique that's kind of decent. For Gartley specifically, what he will do is he will see, as it comes down to the 1272, he'll have a buy stop limit, right above that in case it bounces. Okay, and if it breaks through the 1272, he'll start to arrange the limit order down by the 1618. Okay, and that way you can get in faster. For me, what happens in my trading is I need to wait for the CCI to trigger generally. I will try to go down to a real short time frame trigger, and I'll look for it to trigger, but then the pattern's already playing out in a case like that. So it depends on how daring you are. If you want to limit in sooner, You can do it that way. Yes, Gary?
Are the stats have much difference between a B, C, D grade and market?
Yeah, I would.
Playing out?
Yeah, the thing is, first of all, the ABCD playing out. Yeah, I would say based on my stats, it was about a 45% on the ABCD, and it used to be more like a 50% on the Gartley, but they've been getting better recently, so it's closer to between 65 and 70. Okay. The other thing, though, is the ABCD is more likely to get hung up at intervening resistance. Okay. So, yeah, which we'll cover. Let me see what else I have here as far as examples, and then we'll get into playing with a couple of charts so we can actually walk through the process. Yeah, oh, this is our Russell chart that we referred to a lot yesterday. I think I almost strangled myself just now. Some of you by now probably would like to watch. This was our Russell chart, and what happened here is this was a perfect big Gartley, and we had all the support down here at this point. But I was giving you a live chart, actually, the green dot, so you can see how it played out. ABCD correction here, or Gartley here. And then what happened, remember I said it broke the 786, and so we were looking to focus on the upside target? What happened was this little move in here was a Gartley within a Gartley. Okay, that's why I had that 1272 target down there, overlapping our 618. So that's what happened. It went dink, 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 rallied, broke the 786. So I was focusing on what could serve as support. And what we got was, came right down to the 618, and actually, here's the little price label. The low was 607. Our overlapping 618 from here to here, and our 1272 extension was 6079. 0.09. The Russell trades in increments of 10 cents, so you can't do better than that. Okay, so this is interesting. You'll see this occasionally, Gartley within a Gartley. It illustrates why it's important that whenever you see price failure, 618 to 786, you want to run those downside targets. Take that low to the high to see where the 1272 to 1618 comes in. Okay, so Gartley within a Gartley, you'll see that sometimes. And the main thing is when you get that zigzag correction, you don't want to get trapped short. That's what's happening here. That's why it's taking out the prior swing low, because the people who are not aware of this pattern are going to end up going short, and it's going to spring back in their faces. As a matter of fact, I write a column. It's interesting. I write a column for International Business Times a couple of times a week with longer-term projections and stuff. And there's a woman who does a column based upon more standard chart patterns. So she was seeing, I think I don't have the example here exactly, but it was a Gartley situation. I think it was one of the S&P Gartleys. Oh yeah, it was back here. She was calling for this to be the end. You know, total termination of the rally, because she said it was a head and shoulders. Yeah. Okay. So she was. Yeah. So and I'm looking at it, and it can't be a crown. It doesn't line up that way. The crown's what we're going into next. So she's seeing head and shoulders, and I read her column, and I was like, Teresa, you're gonna get trapped. You're gonna get trapped real bad, because she doesn't know fib. So that's why I say you got to study the fib, because the levels are there whether you know about them or not. Okay. So it's funny, because if you go back in time there, you will see that article. Okay, I'm going to run a couple of examples so you can see what this looks like in progress. But any questions first? Yes, Rory.
Yes, if exactly it's a correction of a previous move.
Yes.
In that case, the ABCD pattern should not go below the beginning of the
prior swing low. Right.
I think it's going to butterfly, that's right.
It would be what? I'm sorry?
Because it's butterfly.
It would be a butterfly, yeah, if it did that. But it wouldn't. It would be a butterfly if you could project, for example. I don't do butterflies much because it's too counter-trend for me. But yeah, this one does look like a butterfly. The thing is, it's not a butterfly exactly because this target, the target off this swing was exceeded. The targets here were up here. It would, for a butterfly pattern, which is something Pesavento's into also, you need to have overlapping targets from the larger swing on the smaller swing up here. And these, we did not have overlapping targets. But this is a Gartley because we also had the low to high here, and this came down also to the 618 to 786, reinforcing the Gartley support. If this had obviously broken down and exceeded the prior swing low, forget it. Then it's not a Gartley. It's a Gartley specifically, like I said back here, because you're holding the major retracements from the prior low. Okay? If we see butterfly patterns, like tomorrow, I'll set them up, but that doesn't exactly qualify. It exceeded the intermediate targets. So,
Mark?
Yes.
Quick, in order for it to be a Gartley, you said you have to have that first leg?
Yes.
It must meet what requirements?
You want to see all that other Gartley or that other ABCD stuff.
Right.
1272 to 1618, blah blah blah, and all that. You want to have major retracements from the prior swing low. Yeah. I like it to land somewhere between 382 to 618. Okay. A lot of people like it if it comes down to the 786. What I found, this might be a little bit going too fast here, and again, this might be something we'll see in the live stuff tomorrow. But I found that if your extensions straddle the 786, in other words, let's say this pulled back, you had the high here, and what happened was it pulled back, so you had the 1272 of this low to high, came in with the 1272 here and the 1618 here. On the other side of the 786, it's a lower probability Gartley. It's probably going to break down. I don't care for those. You read a book on the pattern and they'll tell you that's fine. I'd like to see the stats showing that's fine because I haven't found that. So I like that. Basically, all you need is for that Gartley stuff, the ABCD stuff, to mix in somewhere 382 to 618 to make it a Gartley. So let's see if what we have on the charts now. And actually, I thought I had some more examples that were kind of interesting. ABCD correction, gold, Russell. Yeah, I had some stocks done in here too. Oh, I think one of my examples just landed in the wrong place was the issue. Yeah, here, we'll do a couple of other examples we'll go over. This is a resistance Gartley. This is one of my favorite things to trade, by the way, in Forex, is USD Canadian, because it really, really respects patterns big time. And it forms them a lot and it follows through. Okay? And so what we had here, we had the outstanding low. Oh, the other rule, by the way, for this stuff is that the low at that point, or the high, it has to be the extreme of the trend. In other words, you wouldn't be looking for a Gartley somewhere in the middle of a trend. You have to have the actual extreme going on.
When you're in the trend, when you're in all that chop, how do you know?
Because you're actually at the highest high or the lowest low on the chart on the right-hand side. In other words, this low that I was projecting from was the current low on the 60-minute chart, on the daily chart. This was the current low. Okay? It wasn't something where, for example, someone might say to me, I'll give you a difference on this. Someone might say to me, Mark, isn't this a Gartley? Low to high, and it came back to 618 and went back up here. Isn't that a Gartley? No, it's not. It's not, because it has to start at the extreme low of the chart, not in the middle of a swing. You see the difference? Okay, this guy, if you try to use this as point A, you're already in the middle of this swing. You have a more valid point A back in time. This was the extreme low at that point, basically, for the entire history of the security. Yes?
But if you took from that low and then you went to the next high and then it retraced down again, then it came up again, you got an ABC going. The first...
Here.
Yeah.
Yeah, that's what
it goes up and then it comes down again.
That's what I'm plotting.
All the way in the chop there, in the...
Right.
The beginning, you're going all the way to the right. I'm talking about that little pattern
in here.
Yeah.
Yeah. Well, that's okay. You have to filter that out because what we're looking for is this low to high coming down to the 618. This pattern. In other words, at any point in time, this was the extreme low on the chart. I would be plotting with my retracement tool low to the next high, because I'm looking short still. The pattern overall on the daily, on all the intraday charts, was short. So I'm looking short, and I want to see what might be in the way and where the next downside targets would be. Okay, so I had this plotted anyway. Yeah, you can have all this other stuff plotted too, but I'm looking for the larger swing, the larger, clearer swing.
So Mark, when you do the bar rate, and you do it on a daily, pick the lowest on the daily, If
Yes.
you're using the 60-minute,
Yes.
then you pick the Gartley on the 60-minute.
Right.
Okay? If you do it weekly, well, then you do it on a weekly.
Exactly. Like my point is right now you'd be plotting on the, and that's what we're going to take a look at, for example, the S&P. We're going to plot the Gartley, see how it plays out tomorrow, because we're at a high, a major high.
Right.
And we're going to look for that pullback. Yeah, there's a lot of noise in here. There is a lot of noise in here, you're right. But I'm still looking to see what would have happened. Forget the fact that this is a Gartley. This was the extreme low at that point on the chart. So I'm going to take that low to my next highest high, which at that point was here. Okay, forget this stuff. Doesn't exist right now. Okay, I am going to take this to the next highest high. Yeah, when this noise was here, it was low to this high. It was low to this high. Finally, it got up to this high, low to high. I'm looking for, if it triggers short, what's in the way, like our 786, and where would the targets be? So that would have been plotted. I mean, that was plotted. We had this running. It was in my daily report. Then the 786 held. As soon as the 786 held, high to low with the retracement tool. Where are the upside targets? And in case it's going to turn into a Gartley, low to high from intervening low. Held pretty well.
Mark,
Yes.
when I read my Gartley, I go X to A. Is that your X as the beginning of the move? Or that's A to B?
That's A to B. And the X, well, back in that example where I showed,
Because I'm getting confused from it too, because I like Gartleys, but...
X is the anchor. X is the anchor spot.
So where, that was,
You see the 618?
yeah.
That's 618 of a prior high up here down to this low. So X in this case.
You
Yeah.
just don't see it on your chart.
Right, exactly, because I wanted to focus on this part of it.
So you just focus on
Just like what
You would have taken your, so if it was X to A...
here, look at this one. Here's your X.
So where's the X? So it's
X to A. And what we're talking about is that in some Gartley courses and books and stuff, where you're starting the retracement on the larger swing for the Gartley, they call that X.
So then you have your X to A,
Yeah.
A to B, your C to D, wait, X, A, B, C, D, and then you're taking it at the overlapping, I don't know what it is, 62,
Yeah.
67, so you're taking it long when it hits that, okay.
Yeah, exactly. And the thing, what we're talking about is that in a lot of these Gartley courses and books and stuff, the thing that makes it a Gartley, and Pesavento calls it that too, is point X, is this major low beforehand that's giving you those larger retracements in there. Go ahead.
So you from the previous example, that 127, or I don't know what it was, 162, I don't know, that came from a larger swing.
This one?
You're,
Which 1272 are you talking about?
you would have taken, where would you have taken your entry on that?
As close to this point as possible, once it started to fail.
That came from a larger swing.
What came from a larger swing?
Your entry off the Gartley came from a previous
618
swing
came from
low, right?
I really don't understand what I'm trying to follow. Is this related to the point X question?
Yeah.
618 is the projection, is the retracement from the point X.
Okay.
Point X is just not on the chart, it's up here. Okay, X to A would have been like this.
Okay.
The fact that what makes this a Gartley is that it landed the stuff mixed in with the 618.
Right.
Okay.
You got the new projection off of the A to B or whatever.
Right, A to B from C to give us the expansion. Yeah, you know what, it's going to be a lot clearer when we do some on live charts. I just want, yeah, yeah. And then the target, the 1272 target, one of the good things about a Gartley is you're not dealing with these smaller swings anymore. Once it starts to play out, what you're looking for is the 1272 target of the entire compound swing. So this target was actually here to here with the retracement tool to get the targets. 1272 is down here, and it worked out pretty well. First, by the way, Forex shows a lot of Gartleys. Currencies show a lot of Gartleys. So probably why you studied it.
Yeah, I like that, I like the butterfly.
Yes, Charles?
So the X was not the extreme low then? Where it's going?
X is not the extreme low. No, A is the extreme low. We kind of jumped in there by adding X as a. I don't call it X. That's the only thing. I just say it's the X in this case. What we're talking about is the idea. This is a resistance Gartley. So the point where you got these retracements would have been a high up here somewhere. Again, it's going to be a lot simpler when we're doing live charts on it because I'll be able to scroll around and not have it. Oh, gee, it's not on the chart. You know. Interesting thing here. I mean, just as an example. Well, this one you can kind of see where X is. Here's the same chart, okay? Here's the same chart, and here's the tail end of the Gartley. And it played out to target, and what happened from there? From the target, it started to correct. This is a 60-minute chart. This is a 15-minute chart. And what do we have on the correction? A Gartley. See that? A to B from C, blah, blah, blah. And this is a Gartley because here we have the 50% level mixed in here from X. There's your X. See, up here. All right, that X is like the anchor spot that makes it, you know, so in other words, you would have had your retracement here to here, and you know, and that overlaps your Gartley stuff. What's important though, what I want to reinforce here is the idea that you don't have to go Gartley hunting. If you have your fib work done already, you're going to see that these levels are all going to be on the chart anyway. What all you need to do is learn to recognize the pattern. Hey, it bounced at a 618 or a 786. Do I have everything I need on in the other direction as far as extensions and expansions to see how the pattern might form? I don't specifically look at a chart and go, you know, let me find a Gartley. It's just that if we were down at this low, I would have had these retracements in anyway. You know what I'm saying? I would have had these retracements from here to here in anyway, so on a bounce I could see what would hold. Then when it's starting to rally, I'm going to go low to high, because if it breaks down, I want to see where the targets are and so on. And when it bounced at the 618 to 786, I add this information upwards, high to low to get the extensions, low to high from this low to get the expansion. And that's all you have to do and track and see if the Gartley holds. So it's not like I'm going, I have to do all this extra work to find a Gartley. It's, you know, it's either there or it isn't. One thing I want to, the reason I really have this chart combination in here though, is because the most likely spot, the most likely time that you're going to see these Gartley moves is when you're reacting from a target. All right, in other words, this one hit the 1272 and formed a smaller Gartley because that's the point of indecision. A Gartley represents indecision in the market. So when you hit a target, all the folks are saying, hey, wait a second, is it time to buy or is it going to go down more or whatever? As it turned out, this held and it kept going down. But that's when you really want to be on the lookout for possible Gartley, is when you're at a target and the target is holding. It's when you're most likely going to see them.
When you say target is...
Well, here, 1272 of the prior one.
The prior one.
Yeah, that's when you want to look for that kind of, that's exactly what we're getting in the S&P market now. Is we're up at S&P targets right now, and as of Friday, it's forming a potential Gartley on the daily. So, you know, that, and we're gonna put that together in a minute. The bond chart that we went over yesterday, here's one too. You know, that's why I was focusing on this area. Okay, we had, you know, again, 50% from the level that was up here, 786 from this high to low, so we have all that resistance here. Then this was the extreme low of the swing, okay? This was the low. And when it started to rally, I took my retracement tool and went low to high. First it was this high, then of course the program bumps it up for me as it keeps making new highs. And it dipped down, and this held between 618 and 786. So as soon as it did that, I said, you know what, in case this is rallying, I need to find my upside targets. So how do you find upside targets? High to low, the U-turn you're looking for, high to low with a retracement tool to project 1272 to 1618. Bless you. And then you're going to take your expansion tool, low to high from intervening low. And that's exactly where it held. So that's a Gartley. And again, even if you knew nothing about Gartleys and you're running all the fib stuff I talked about yesterday, you'd have these levels anyway because you're going to want the target of this swing. We were long during this time, and you want to know where the daily target is up here. Everyone get that? So it's not like I had to do anything special on this chart to see if it was a Gartley or not. All the work was done already. It was just something that was reinforcing our current res. Yes, why?
If I'm correct, so the pattern is this: you have an XA in the moon, and then the AB has to be between 382 and 618. Is correct?
No, D, wait a minute, AB? Yeah, B, no, C has to, wait a minute. A to B?
Yes. Or is this not?
No, wait, you want point D to land between 382 and 618.
So AB could be anything.
Yes, AB could be anything.
But what is critical?
That when this come down,
C has to be between 618
C, yes, C has to be 618 to 786.
of AB.
Of A to B, exactly. Okay. And again, we'll go over these with some other charts. I just wanted to give you the foundations here. Just to show they work on this. It's funny because I had a couple of charts done already for a few of the stocks you guys wrote down. Here's Google. Okay. I just want to show you how this works on different markets. Here's a little Gartley right in here. And it bounced up. Pricey stock.
Is there a projection for resistance?
This is not current work on the chart. We can do that, yeah, if you know. This is Apple. Here's a couple of them. Back here, there's your Gartley. Okay, anchor point was down here earlier, the X. This work would have been done anyway, when this was the current high. Again, this is not a big struggle to find these patterns. You would have had this low to high with the retracement tool to see where support is. 50% held. When this started to go down, you'd have your high to low to get upside targets and resistance. And then it failed at 618 to 786. Came down, started to fall. You want to see the downside targets. That's where it held. Okay, and there we go. And here's another one, more recent. Here's another one, smaller one, more recent. And now it came right up to target.
What date does that take you to?
This chart I printed out, this was closer to the start of October. This was like the first week of October, yeah.
Really, size doesn't matter.
I'm not getting near that one.
Referring to our chart.
Exactly. Yeah, it doesn't matter. There is a slightly lower probability on Gartley's where the second leg, C to D, happened really quickly. Not so much on a daily chart, but intraday. If you're running a 15-minute chart or a 60-minute chart, and A to B takes 10 bars and C to D takes 2 bars, it's more likely to break through to downside. Okay, that's related to a size issue. Not so much on daily, but as far as intraday, that's something you want to look out for. Basically, the ideal Gartley, you have a symmetrical number of bars between A to B and C to D. And I'll show you those tools when we get to timing. Yes, sir.
I was really surprised when you said you allow a Gartley to have like a 382.
Yeah.
And because I've always read it differently.
I know. That's what I started out by saying. I have different rules, and the 382. You generally don't read about the use of the 382 the way we use it. Anyway, Yes.
Just to reiterate, for you the C to D has to be between 100 and 127.2% of A to B, correct?
No, it has to be between 1272 and 1618 of B to C. Of B to C. I'll show you. Let me.
The reverse. So it's not a projection. You're reversing.
Right. Yeah, B to C for 1272 to 1618, and then you want A to B with the expansion. A to B from C to get the 100% in there.
That's what I meant.
Okay. Well, you said one. You said one.
C to D should be 100 to 120% of A to B.
No, that has nothing to do with the 120%.
You take the measurement of A to B and you project it from C.
Yes.
And it should be between 100 and 120%.
The 120% is from the B to C extension. That will land in a different place than a projection A to B from C. I don't use the projection tool. It's a different measurement. A to B from C is simply a 100% expansion. B to C To get that U-turn, that's between 1272 and 1618.
Retracement or projection?
Both. You know what? Let's do it with a live chart. And that'll make it a lot easier, I think. I just want to get through these examples a little bit. I had one, I just wanted to point this out that it works on cheaper stocks too. Here's someone's MSO. This was a while ago. Instead of looking at $300 stocks, this one was kind of dragged out. But notice how far that took you. There's your Gartley. Yep, it looks lopsided, but the thing is, if you had the fib work done, as soon as you had that high in place, this fib work would have been here. So you'd look for that to hold. And it certainly at least would have been a warning about stuff in the way of your shorts. That's the target of that swing. So you'd be looking for the possibility of the long side trend continuing. And it sure did.
Right. Understand the mechanical of A, B, C, D.
Yes.
Yes. The purpose of the Gartley is to see, is the trend go, is it a reverse or
continuation pattern?
Continuation.
That is what a Gartley is, a continuation pattern.
If I'm within the Gartley rules, then it's because it will rally up again.
Right.
If it's going down my parameters, then it may be just a reverse.
Yes, if it breaks through the Gartley, the likelihood is more that you're seeing a reversal instead of a continuation. Okay, I don't know if I have any more examples here, but I want to get to some live charts. Yeah, that's a different pattern already. So let's just take a look. Hopefully all these charts are loaded. I'm just giving you some time for that. Where is that current S&P chart as an example? S&P cash. Okay, this, by the way, is the current S&P cash daily. All right, and we've made it up to this target. And so if I go down to the ES, for example, I'm just using this because I know it's there already. ES 15-minute or 45-minute chart would do. Where is my... Okay, here's a 45-minute ES, that's the mini S&P, okay? And I'm just using this now because I'm not sure where there's one on a Forex chart either. But here we are. This is current. This is, as of the close on Friday. All right, let me just expand the chart a little bit. Now, of course, if you look at the daily chart, it makes it pretty obvious that we're at the extreme of the trend, right? We're at the extreme of the trend. So, it's obvious that on the 45-minute, we're at the extreme of the trend. In other words, we are looking for fib work related to this high. We're not looking somewhere in the middle of a swing. Remember, the Gartley should start from the extreme of the trend. Okay, so here's the chart. Now forget the whole idea that we're talking about Gartleys. Just forget it. What we're going to do is look at the support on this chart, just as we normally would, Gartley or no Gartley. Okay, so first step, I'm going to take my expansion tool and look for prior declines within the rally. That one broke, so I'm going to get rid of it. See what might have held. This, by the way, is what's giving me a little bit of feeling that there might be a reversal coming into play, because since the daily swing low on October 2nd, every symmetry support level has broken as of Friday. This one just barely. We can leave that there for the moment. No, I'm going to take it out. Broke too much. All right, so we only have one symmetry level. If I start adding these earlier ones, that's stuff that's so far away, it would be better off on a daily chart. I'll put them in there just to show you how I do the work. And now we're going to take our retracement tool and go to the major low. I'm just calling it the major low because this is a daily swing low also, October 2nd, to the high. Okay. There's that 236 up there, which is kind of telling me that if that hasn't even been tested yet, market's pretty extended. Let's take a closer swing low to high. All right, on the closer one, we're holding a 50% level at the moment. 236 at least might reinforce the 618 a little bit. I don't think so particularly, but we'll leave that like that. Now, so we opened on, this was Thursday's close. and this was Friday's open. So we're going to try to get set up for the day. Let's assume Friday morning I would have had, as soon as we made that low, high to low. Okay? High to low, because we want to see what's in the way on the way up and where the targets are if it breaks through. So let's delete the stuff that broke. And what held? Well, 618 kind of broke. But where did it start to fall? Between 618 and 786. Okay? So wherever that started to fall, I would want to see where my downside targets are. Now, the reason I'm showing you this, I'm showing you the exact sequence that I would use to analyze this chart. As soon as it started to fall, I'm going to go from this new low, new swing low, with my retracement tool, to the current high. Because if it breaks down, I want to know where my downside targets are. Okay? So now we have a few levels overlapping here. All right, the 236, we have a 618, and we have the 1272 of this potential U-turn if it keeps breaking down, okay? But now I'll start thinking, you know what? It broke, just barely broke the 618. Obviously, the high is between 618 and 786. So the only last step I have to do to check for the Gartley potential, expansion tool, A to B from C. And that lands right between our extensions of 1272 and 1618. Let me zoom in there a little bit. Okay? So this, this shows you where the different ratios come from. Let me find a trend line. Here we go. In other words, this is point B to C, 1272 to 1618, and then using the projection, the expansion tool, we're going A to B from C to come up with 100%. All right, so we have Gartley support that we're looking at. We're going to see what happens with this tomorrow morning, anywhere from 1071 to 1075. All right, and we're going to want to see if that holds if and when tested. Now, what would give us a relative degree of assurance that that is going to be tested? First of all, assuming we don't have a big gap down tomorrow morning, what would we look for? Okay, now I erased too many things. What would we look for to give us the idea that that downside area might be tested? Anyone have an idea?
If it falls between 618 and 786C.
Okay, now I got some tool doing something here. I don't know what it is.
And if that's a high.
Let me just get this line back in here. Well, it already failed between 618 and 786. What I'm asking is, what degree of assurance are we looking for that we're going to see 1071 to 1075 targets? Targets, that's a key word.
You got a 786 in here?
Okay, what did I hear about a 786? What's going on with this tool?
You got a 786 so low it's breaking.
Exactly. Because what was I saying yesterday? I'm just having a little problem here with choosing the right tool because my toolbar's moved around.
What is the answer?
Yeah, I'll get to it in a sec. I just wanted to get that projection back in there. Remember what I said yesterday? These are targets, extension targets of this potential swing. Okay? And what I had said yesterday was that if you can break the 786, this one here at 1080, it says 1079.92. The ES trades in 25-cent increments, so you have to round it up a little bit. 1080. If we can break the 1080, we're looking for the targets of that swing. So that becomes the key level. That becomes the key level to tell us whether or not we're going to make the downside targets and end up seeing the Gartley support. All right, so if someone's a shorter-term counter-trend trader, a break of that 786 is going to allow them to work towards the 1075 minimum. All right, again, this is assuming we don't gap down tomorrow morning, of course. But a break of that 786 activates the target at 1075. Okay? And that means that we're heading into the Gartley support. So then we'd start to look for whether or not 1071 to 1075 holds. Gold star to whoever recognized the 786, as long as you're not in my chat room. Because that's what we're looking at all day, too. This will be Gartley support if that 786 breaks. Is everyone clear on that? We'll do other examples if I can find some Gartleys currently, but okay.
The fact that we had 5 gaps in a row, you don't look at any other chart patterns or?
No, I do look at other chart patterns, and we do take the gap into consideration and during the intraday trading stuff. We take it into consideration just as far as how it may affect momentum, but the reality is we have other indications as far as whether or not the gap's going to be filled. Stuff that I'll go into with CCI, for example. Showing like a downside gap, we'll see momentum dying. And yes?
I'm confused by the red 100% line. What significance does that have?
Well, because that's another potential place it might hold. That's the projection
From
A to B from C. Okay? And what you want to do is, what you want to see is that is either between the 1272 and 1618 or overlapping one of them. And what might happen is we might break the first support. We might break 1075, but that guy, comes in at 1072.50, that might be where it holds. So it's an alternate area of support. Does that answer your question about where I'm talking about the projection? Okay. Would it help if I ran through that again?
I think it would be very helpful if you took a chart that is not marked and somewhere in the middle.
Yeah.
So that one can see one by one all of these things, because here you're speculating on what's going to happen tomorrow.
Right, well that's exactly the purpose of doing it though, so we can be set up for it.
It's good to follow.
Yeah.
To me, what do you call it? Somewhere in the middle so that we can see one by one.
Okay. Okay, well let's take this, let's get rid of all the levels on this current S&P cash chart, because I just happen to have it in front of me.
There's a beauty right there.
Exactly. That's the one where the other author was saying that that it's a head and shoulders.
Can go slowly so
I'll do my best. Right now the program is making me go slowly because it seems to be losing connection and reconnecting and stuff like that, so it's a little bit frustrating. Okay. First of all, let's assume, remember, that's the current high, all right? Forget about everything else over to the right at the moment. That's the current high.
Is it not because uptrend? Firstly, what kind of trend are we looking at currently?
What do you think?
It looks up from this time frame.
Yes.
That leg.
Yep.
But it could actually be a reversal
From here?
It could be retracement from another time frame. So
Yes, it is. If we go to the weekly.
exactly.
Yeah.
Right.
Okay. So let's see. Yeah, this program is starting. This is something with a connection that's getting a little annoying. Yes.
They were looking for support Gartley or resistance Gartley. Is that correct?
Yes, but you can have a support Gartley on the daily and a resistance Gartley on the weekly. And then it's a matter of which one wins.
Well, for this time frame, we need to establish what trend we're at to determine what type of Gartley.
Yes, check this out. All right, we're talking about being here. Oh, come on, being here in time. So would you say that from this low to this high, we're in an uptrend?
yes.
No, you say no?
Yes.
From this low to this high, we have a pattern of higher highs, pattern of lower lows. That's an uptrend. Forget about this stuff. I just can't get the chart to scroll the way I want it to. Okay, so we're in an uptrend. At that point in time, we're in an uptrend. Okay. So that's the current high on the chart. And the fib work we'd have done anyway, we'd have low to high with our retracement tool. Okay, and we might look for another outstanding low. Let me see. You could actually do several here, but I don't need to clutter the chart up too much. Okay, I think I hit the wrong spot. Okay, I hit the wrong spot with this one. Nope. Yeah, I'm sorry. You know what happened was I lost connection for a minute, and so the charts are updating themselves, and it's making the tools kind of wonky. All right, so let's say we had all that retracement support. Then my point is this is work that would be done already anyway because we want to know where our support is on the chart. And then that's the current high, right? Remember, that's the current high. So we start to rally. and I want to see what the upside target is. So I would have had it like this at that point. Check this out, folks, please. High to low. Let's say that was the current low. All right? That was the current low. And it started to rally, okay? Started to rally, 618 got in the way. All right, as soon as it starts to rally, actually, I'm also going to go over here. All right, wait a second. Here, I'll leave this in so you can see where it failed. As soon as it starts to rally, I'm going to want to find my new support anyway, so I would also have this low to high. Okay, everyone follow that?
What tool are you using?
Retracement tool. Okay? All we've covered so far, expansion tool and retracement tool. So this is the retracement tool. Now notice it failed at the 618. Okay? So it failed at the 618. If for some reason I didn't already have the intervening support and my downside targets, I would want to fill it in at that point. So here we go. We have our downside targets. Let's say we're still a little bit, if this will scroll for me, we're still a little bit back in time here. I'm just trying to get it as though that were the current time, okay? Come on. All right, so there, started to fail, okay? It keeps scrolling. What I would also then do, yeah, because the program's trying to update. Again, A to B from C.
That's
All right.
the tool.
That's the expansion tool. A to B from C. Whenever you hear the word from, it's the expansion tool. Okay, A to B from C. And that would be the construction of the Gartley support. So when we got down here, if we had been short, these are the targets of that U-turn swing anyway. And because it failed 618 to 786, one of the reasons we have the expansion in there is as a reminder that this is a Gartley.
Excuse me, that is where the confusion settles in.
Okay.
You're measuring B to C and a retracement, and you got the 127.2, which is where the Gartley is referring.
Yes.
You're taking an expansion from A to B,
Yes.
then taking it from C.
Yes.
That is your extreme failure of the Gartley, is that what you're saying?
No, that is if it overlaps, I want to check to make sure that's going to overlap 1272 to 1618 or be in the middle. It reinforces the Gartley.
Thank you.
Okay, you're welcome.
Here's everything else.
Fantastic. We'll do more examples later. I think we have to change the tape.